School is back in session, a little bit of teaching about real estate economics 101. Today, we're going to be talking about a B&H. Yes, a buy and hold. So here, I want to give an example of, this is actually a recent one, and I think that's important. There's a lot of people out there right now. It's like, I don't want to buy any rental properties in this market. You know, people are just kind of frozen right now. This is one that was purchased this year and then refinanced a couple months ago. So that's important to know that you can still cash flow in this market. So I'm going to break this one down. This one is in North Charleston. As you can see here, the rent for this one, getting $2,000 a month. Vacancy at 7%, $140 a month. That's pretty much 1 month a year it's going to be vacant, especially in an area like North Charleston or a lot of these areas. As long as your rent's in the range that you should be getting, they don't really sit vacant too long. So $140 for vacancy is very reasonable. You also want to analyze all your expenses, because I hear a lot of people say, oh, I get $2,000 a month in rent, and let's just say the mortgage is $1,200 a month, I'm cash flowing $800. That's not really your actual cash flow. So I want to show you how we analyze our deals to say, what is that real cash flow that we're getting? So then we'll break down our expenses. Property management on this property is $155 a month. Maintenance, which also includes exterminating, CapEx, because there was an upfit, there was a renovation done to this property. So $100 a month in maintenance. Taxes, about $118 a month. Insurance, another $125 a month. And then the loan on this property is $1,150 a month. It was supposed to be a 7% interest rate. There was a rate buy down, so we got it down to about 6.875%. Again, this was recently in the last couple months for this loan product. So as you can see here, the actual real cash flow on this property per month is $210. Now, doesn't seem like a lot of money, but at the end of the day, when we're into this property for about $20,000, that right there is over a 12% cash on cash return. So it depends on how you analyze your properties, but a lot of times what we do is we say, okay, our money's going to work for us. What kind of cash on cash return? So my cash in there, what's my cash on cash return? So if we're 12% or higher, to us, a cash on cash return of 12% or higher is what we're shooting for. So we're earning 12% of real actual cash flow, cash on cash return. We're having a tenant pay down the mortgage to build equity in the property for us that's being paid by a tenant. And we have an appreciating asset over time. If we plan to hold these for 10, 20, 30 years, this is a good way to build wealth. Again, this is a property that was bought in this market. It's cash flowing, even at the higher interest rates, and it's helping build wealth for the future.